Okay, let's take a look at problem 326, which is a comprehensive cycle problem related to perpetual systems. Okay, at the beginning of 2018, the red company had the following balances, and you can read the balances there. And then there's 8 transactions. And what we're supposed to do is identify every one of these transactions or events as an asset source event, an asset use event, an asset exchange event, or a claims exchange event. And we would select NA for not applicable if there's no effect on the classification. All right, so let's take a look at the first one. First transaction says, purchased inventory that cost $5,600 on account from red company under terms of 210 net 30. Now, I think they actually mean from a different company. The merchandise was delivered FOB shipping point and freight cost of $510 were paid in cash. All right, let me slide up and sort of show you. Now, this first transaction there's really 2 parts. There's the purchase of the inventory, and the purchasing up the inventory is an asset source, right? We're increasing assets. Now we think of an asset source transaction as one that increases the assets and also increases the claim on the asset. So in this case, the inventory goes up and so does a claim, which is the obligation to pay for that, right? We would increase accounts payable. Okay, then there's a part B. The merchandise was delivered and freight costs were $510 paid in cash. So with regards to the shipping cost, that's an asset exchange transaction. Now, an asset exchange transaction takes place when one asset is exchanged with another. So in this case, cash decreases and the shipping cost, which is included in the cost of inventory, increases. Okay, see how that works? So there's the cost of the inventory plus the cost of the freight. Both get included in the value of inventory or the cost of inventory that we would use. All right, so let's jump ahead to another transaction. Let's work number 4. Okay, now I slid up so you can see this. All right, so on number 4, we sold inventory that had cost $6,100 for $9,100 on account under terms of 210 net 45. Which means we expect the buyer to take a 2% discount if they pay us within 10 days. Otherwise, they have to pay all of it in 45 days. So we have actually 2 parts of this transaction. First, we have the recording revenue, right? And the recording revenue portion would be what? An asset source, an asset use, an asset exchange, or a claims exchange. Okay, well this time it's an asset source transaction. We record the revenue. Okay, now this is an asset source transaction because it increases an asset, right? In this case, the asset that we're increasing would be accounts receivable, since it said it was sold on account, and it creates a claim. And the claim here is the claim held by the owners, right? Because revenues essentially increase owner's equity. Okay, to explain this concept a little bit better, you can see I put this definition on the screen. An asset source transaction is a transaction that increases both an asset and a claim on an asset. There's 3 different types of asset source transactions. We could have an acquisition from the owner, such as when owners put money into a business. You could borrow from a creditor, right? You're issuing debt to somebody else, and that increases cash in the business. Or there's earnings from operation in the form of revenues, and that's what we have with number 4. Sales are a form of revenues. So in this case, we have an asset source transaction as a result of selling something, having revenues. So the claim, if you will, accrues to the owners. All right, next we want to look at 4B, which is the recording of the cost of goods sold. remember, we always have to match cost to the revenues in which they occur. So if we're recording the sale of goods, we also have to record the cost of those goods in the same period that we're recording the sale. So in this case, the cost was $6,100, but we need to know, is it an asset source, an asset use, an asset exchange, or a claims exchange? And in this case, it's an asset use. And I've put the definition, or at least one definition of an asset use transaction. It's a transaction that decreases both an asset and a claim on an asset. Okay? And there's three types of asset use transactions. We could have distributions, like a dividend, right, where we reduce assets and pay it to the owners of the business. Stockholders are indeed owners of a business. Or we could have liability payments, where we reduce assets to reduce our liabilities. Or we can have expenses, the various costs that are incurred to operate the business. And that's what this is. Cost of goods sold is an expense, and it's an expense that we incur to operate the business. So assets are decreasing because the inventory is going away. We're recording the expense. As a result, this is an asset use transaction. Okay? I hope you found these helpful.